Hey, good morning. It's Julie. It's Thursday, January 28th, and I don't know whether to tell everyone to get their girdles on or to go back to bed. Let's take a look first at the disclosures. Futures trading contains substantial risk and is not for every investor. Past performance is not necessarily indicative of future results. And hypothetical performance disclaimer: no representation is being made that any account will or is likely to achieve profits or losses similar to those shown. What happened on your charts yesterday will not happen on your charts today. Trade every day, one at a time. We've got our weekly, daily 60-15 on the E-mini, all pointing down. Miss Yellen did a great job threading the needle, containing price action in a range, and unfortunately, a head and shoulders, left shoulder, head, sort of like a triple right shoulder, is setting up. And we have a interesting situation that is setting up with the oil, because the retail traders are going to be pushing this down for the gap close at 31.94, yesterday's VWAP, and yesterday's point of control. And so that's going to spark crude coming out of that head and shoulders. And because there's no liquidity normally in the market outside of a higher time frame intervention like there was yesterday in crude, this is a higher time frame intervention. When you get an API report signaling you that there's going to be a large drawdown, and yes, there was a large build. I'm sorry, not a drawdown, a build, inventory supply build. And yes, there was a large inventory supply build. And then the market higher time frame pushes this up. There's only one way to trade that, and that is to follow along with them and pick up on their move, driving it higher. So today we've double topped and we're rolling over, coming back to our retail traders trading locations, and this will likely send, in my opinion, the E-mini out of its head and shoulders. So we'll just have to see if we get our dovish soft landing at yesterday's 127, or if this continues to build steam and propel down to the support 2 location because of the lack of liquidity that's in the market. The Wall Street Journal did a good piece on this last summer, indicating that the bond traders are moving over to more futures because at the time in the summer the bonds were not moving at all. The government has forced the banks and other major market participants out of the futures trading markets, the bonds. And so people were moving over to try to find other markets in the futures to trade. Well, we've got a lack of liquidity crunch in our own futures markets, where they trade in ranges, as evidenced last year and is evidencing this year with these big ranges. Head and shoulders is nothing but a big range. A failed head and shoulders, or a successful head and shoulders, is a range expansion. Where I'm going with this is if we get central bank involvement or higher time frame Goldman Sachs or whoever propping this market up, just go with it. Don't worry that, don't get married to any position, long or short, is what I'm trying to say, because you never know if, you could be trading with the retail guys, hitting your marks, hitting your algo locations just fine. Everything flips on a dime where it's supposed to, and you can, take your turns, and normal trading turns into abnormal trading with a counterparty central bank or a United States central bank or a Goldman Sachs footprinting all over the market. And that's happening when they blow past those levels. So when your levels are being blown right past, just follow what they're doing. Don't even try to second guess it or say that there's going to be a trade against the trend, because there won't be. So right now we have mixed markets. We've got our head and shoulders setting up. This is very interesting because this is a mini right shoulder, head and shoulders setting up inside of a larger head and shoulders setting up. So very, very interesting pattern. So a three-headed right shoulder inside of a big ass head and shoulders. Very, very cool. I mean, very, very cool. And so now we're hitting our yesterday close. So we'll see how the reports bring us to what the markets do with our pending home sales, our durable goods orders, and see if there's anything popping on the initial jobless claims. But otherwise, I think it's all going to be about crude. And if the market participants stay with a day two of this and hold the market up at certain levels, thereby reversing that potential liquidity drop on the ES because of the retail traders going for their levels. All right, you know what I'm saying. So I will get to it, get to the markets, and let you go. Thank you so much. We'll talk to you soon. Bye-bye.